Asian markets moving off the lows of the day. The Nikkei is now in the green. The Hang Seng, we're getting early rates from there, 60 points in the green. And the SGX Nifty very, very close to that 11,000 mark as we speak, just about 4-5 points away. Yes, there we have it, 10,997. And this after the markets witnessed a sharp recovery in the second half yesterday. The Nifty reclaimed the 10,900 mark. Sensex too recovered more than 300 points from the lows. Overnight, we saw a sharp decline in crude as well as the big announcement that came in from the RBI. So in all of that, what are the cues and how the markets are likely to fare today? We have Soniya this morning to give us all that is stacked up. Soniya, good morning.
Hi Mangalam, good morning. The bulls are in complete charge of this market. As you rightly pointed out yesterday, the big surge really came in the latter half of trade, as it has been for the last few days. In fact, the Nifty is now up almost 575 points from the lows that we hit on the 11th of December. So that was perhaps the best buying opportunity for short-term traders. It's important to see if the 100-day moving average of 10,938 gets conquered. I mean, no levels really matter now because the market is in a firm short-term uptrend. But 10,938 is the 100-day moving average to look at. The big talking point globally, as you guys have been mentioning, is the fall in Brent crude. Brent crude has hit a 17-month low on oversupply concerns, and it fell 4% yesterday to a low of $57.2 a barrel. So we'll keep tracking a lot of these, crude-sensitive stocks. FI has also bought and trade yesterday, so 145 crores of buying in the cash market. The rupee has surged to the highest level since the November 30th, and we are expecting a rally in the government bond market as well. Because of that massive bond buying program that the government has announced, the RBI will be injecting 50,000 crores of additional liquidity in the month of December through the open market operation route. Global markets also stabilized. The Dow was a bit in the green yesterday after 2 days of a knock, and the Asian markets have also recovered. The SGX Nifty is also up about 31 odd points. So it looks like the market rally will continue. And we also have that additional news about the NSE launching weekly options on the Nifty index. This could perhaps help increase volumes in the options segment and provide a hedging tool for traders. All in all, the outperformance that India has seen compared to global peers continues. So in the month of December so far, the MSCI India index is down just 1.1%, while the MSCI Emerging Market Index is down 4.5%, and Asia ex-Japan is down almost about 5%. Of course, the US markets have fallen further.
Okay, Sonia, so tailwind for the Indian markets today in terms of crude as well as the OMO announcements, but stock-specific action that we're expecting today?
Well, IDFC and Capital First, that merger will be effective December 18, 2018. So that stock will be in focus. The fall in Brent crude could give rise to a lot of these oil marketing companies, paint companies, tire stocks, etc. So keep an eye out on them. Stocks like Interglobe Aviation have already risen about 25% from the lows that they saw in the months of September. PVR, there's a board meeting on the 21st of December to consider fundraising. The stock has been hitting new highs day after day, so keep an eye out on that stock. Reliance Communications reports suggesting that the Department of Telecom has rejected the Geo Spectrum deal. So that stock could be under pressure, and some delivery buying in the marquee banking names. Remember, the Bank Nifty was the one that led the charge yesterday. So there was 300 crore delivery buying in ICICI Bank, 400 crore delivery buying in Axis Bank. So perhaps that could assume leadership today as well.
All right, you spoke about Bank Nifty. Thanks a lot for that, Sonia. So let's see whether the financials do well today or not, because the big focus will be on bonds, which are expected to rally. This on the back of RBI's decision to step up the pace of its purchase of government securities under open market operations. The central bank has announced a massive 50,000 crore OMO. Lata is here to tell us how this will impact the money markets today. Lata, more money coming to the system, bond positive?
Oh, it's extremely positive. The expectation was they would do 40,000 crores of bond purchases in December, January, February and March. Now it is going to be 50,000 crores in December and January, and a reasonable promise actually even for May. The liquidity conditions will continue to be monitored, and depending on the assessment, RBI may consider similar quantity of OMO purchases until end of March. That sentence can only be read as 50,000 crore in February and March as well. So the market had assessed that it would get 1,60,000 crores from now to end of March. Of that, 20,000 is over, already done OMO. Now it is going to work with 2 lakh crore. This is almost bringing all the shortfall in the market into neutral. It's extremely positive. Already yesterday, because of crude, we saw the bonds yields falling down to 7.35. Starting at 7.3 is a given. And, if with crude continuing to go down to 56, expectations of a rate cut will also start getting penciled in. So it may not even stop at 7.3. You're right that bond prices will rise and bond yields will fall. When bond prices rise, the mark-to-market gains will obviously make all the banks look good. The PSU banks in particular, who hold a lot of AFS bonds in their available for sale category. But more than that, it is pushing down the cost of capital for the entire system. So this is NBFC positive and other bank positive. Much more, it is small cap positive, mid cap positive. After all, why did the entire mid cap rally get punctured? Because cost of capital had risen. Now that cost of capital is getting rolled back a bit. It cannot go all the way down to demonetization levels, but it is definitely coming down. So this will be much broader than just a financials rally.
Absolutely, because when the cost of capital falls, the denominator goes lower. Absolutely. There is a case for maybe some valuation up move as well.
Exactly. It is valuation up move. Of course, it's not a whole lot. We must not run away. This is not a rate cutting down cycle that the first cut has started and we are expecting 4 cuts down the line. No, the cut is still a hope, but at the moment it's going to be liquidity.
Okay, so liquidity boost coming in from RBI, positive for yields as well as over market valuations as well. Thank you, Lata, for putting that into perspective.